Welcome, grade 12s, yes, to Matrix Uploaded, which is going to be your favorite learning channel for accounting to ensure that you reach that goal. And what goal are we talking of? The goal that you want to score at the end of this year, when you write your final exams, when you want to ensure that when you receive your symbol sheet, that an A appears there for accounting. All right, let's get right into it, and let's start off with a bank reconciliation. Remember, you are expected, yes, to prepare a bank reconciliation statement. You are also expected to analyze and interpret the bank reconciliation statement. So one is the preparation of it, and two, the interpretation, and obviously the interpretation of the bank reconciliation statement. Also, what is important is you got to understand that in terms of ethics, how does this all fit in to bank reconciliation? There could be ethical questions that are based on the bank reconciliation statement. So you need to know that as well. Okay, then you got to demonstrate the knowledge of internal control processes. In other words, there could be questions based on internal control around bank reconciliation statements. So that's important as well. So understand, it's not just a mere preparation of the bank recon, but more to do with internal control, ethical questions surrounding certain things, fraud that may occur, because remember, we're dealing with cash. And when people are dealing with cash, obviously the chances are that there could be fraud occurring. So this is what we're going to be dealing with. Right. Now, what's the procedure for preparing a bank reconciliation statement? The primary purpose of doing a bank reconciliation statement is to determine exactly how much money do we have in the bank. Is that the only reason? Certainly not. The bank reconciliation will also serve as a means of external control to ensure that our records of receipts and payments correspond to external institutions such as the bank. In other words, we need to know exactly what amount would be appearing on the bank statement, what amount is appearing in our bank account, and also checking to ensure that the two are in agreement. Now, when you are preparing a bank reconciliation statement, what do you have in front of you? You have in front of you the bank statement that you are receiving, this one here, that you are receiving from your bank. They're sending it to you. You have your cash payments journal, which you have drawn up. You have the cash receipts journal, which you have drawn up. And you also have last month's bank reconciliation statement. Let's get clarity on this, guys. You've got this month's bank statement, your cash receipts journal, your cash payments journal, and last month's bank reconciliation statement. That means the previous month's bank reconciliation statement. Is that clear? Right. Okay. Now, if you have all of that in front of you, what's the procedure for doing a bank reconciliation statement? Compare the bank column of the cash receipts journal to the credit column of the bank statement. Why is that? Because your relationship between you and your bank is that of debtor and creditor. If you have money in your bank account, it means that the bank owes you money. Therefore, your bank account is showing you a debit balance to indicate that the bank is a debtor to you, whereas the bank statement will reflect a credit balance. Why? Because the bank is saying that we are owing money to this particular institute or business. Okay, so do we clearly have that in our minds? Right, next one. Compare the bank column of the CPJ to the debit column of your bank statement for the same reasons that I alluded to earlier on. Right? This is exactly the same reason. Compare the previous month's bank reconciliation statement to the current one. Why is that? So that you can see that are there items that were outstanding last month that are now through this month. So obviously you then compare the previous month's bank reconciliation statement to the current bank statement to identify what has gone through and what is still outstanding. Tick items that are common as these are in agreement. You tick them off, they are in agreement, and therefore you can clearly see that nothing needs to be done with those because they are appearing where they're supposed to be appearing. They are common, they are in agreement. Unticked items on the bank statement must be entered in the journals. Thereafter, you total your journals. Okay? So any unticked items on the bank statement, you enter them into your journal. Post to the bank account in the general ledger and balance the account as usual. Any unticked items in the journals and in the previous month's bank reconciliation statement must be entered into the current bank reconciliation statement. Okay, so you've seen exactly the procedure that we're going to be using in order to reconcile. And we are stopping here where we said any unticked items in your journals and the previous month's bank reconciliation statement must be entered into the current bank reconciliation statement. Don't go away. We'll be back in a jiffy.